Hello and welcome to SKANS eCampus. SKANS eCampus is a gold-approved learning partner of ACCA. On this channel, we bring you demo videos of different courses available at SKANS eCampus. So don't forget to subscribe to our channel to get notifications of additional videos and hit the like button.
So in a previous session, when we covered general principles of external audit, we covered that external auditors are required to comply with code of ethics that are applicable on them. An extension of that is this session's topic, professional ethics. Now these are professional ethics that are applicable on all auditors wherever they are practicing. And there are two topics within this topic that are very important from exam perspective. The first topic is fundamental principles of the ACCA's Code of Ethics, and the second important topic is ethical threats. In this session, we are only going to be covering fundamental principles. Now, these fundamental principles may be tested in Section A or Section B of your exam. Remember, Section A would be objective test questions, including multiple task questions, while Section B will be based primarily on constructed response questions. So it may feature in any of these two or both of these in a particular exam. It is very important from exam perspective. Please prepare it well. Going into the detail of fundamental principles, remember there are 5 fundamental principles of ACCA's Code of Ethics. You cannot change the names of these fundamental principles. However, you can explain them or you may explain them in your own words. The first fundamental principle of ACCA's Code of Ethics is integrity. Now, you can explain it however you want in the exam, but what you need to ensure is you're using 2 key words in your explanation of integrity. The 2 key words are the auditor needs to be honest and straightforward in their practice. So, it is the auditor's job to remain honest and straightforward and report on facts that they've come across in an honest and straightforward manner. It is not the auditor's duty to distort facts or manipulate facts, as that would be a breach of integrity. The second fundamental principle of ACCA's Code of Ethics is objectivity. Within objectivity, you may explain it however you want, but use these keywords. The auditor's opinion and the auditor's practice needs to be free from influence. The auditor needs to be independent. Their opinion needs to be independent and their practice needs to be independent. So the auditor's opinion cannot be influenced by shareholders or directors. The auditors need to practice as independent third parties. Another fundamental principle is professional competence and due care. Remember, you have to learn these words and reproduce them as they are in the exam. You cannot change these words. Professional competence means the auditor needs to have skills required to practice audit, and due care means keeping skills up to date. One of the ways to keep skills up to date is attending CPD sessions. CPD means continuous professional development. So, if an auditor has passed exams of a recognized qualifying body and is a member of recognized supervisory body, then the auditor would be professionally competent. But professional competence also means that when you're assigned to an audit, you have experience and skills that are needed to complete the audit. So that would mean knowledge of the industry or the sector in which the client operates, having audited similar clients or similar sector in the past. And due care means keeping those skills up to date. Now, if I qualify my exams in, let's say, hypothetically, 2010, then my skills are 10 years outdated. I need to attend CPD sessions, continuous professional development sessions, in order to ensure that my skills are up to date. I am up to speed on all of the new accounting standards or financial reporting standards that are coming out so that I can check their application. The next fundamental principle is confidentiality. Now, this is very important. You have to listen to this carefully. The auditor comes across a lot of confidential information during the course of audit. Remember, confidential information is any information related to a company's performance that is not available publicly. So, confidential information could be something as simple as ledgers and source documents. So, the auditor has knowledge of a lot of confidential information, and it is the auditor's duty to ensure that this confidential information is not disclosed to a party outside of the audit, and it is not used for the auditor's advantage. That would mean not using information that is available to the auditor during the course of the audit to trade in shares, which is also called insider dealing and is prohibited in all of the jurisdictions. And it also means not disclosing confidential information to anybody outside of the audit. That would also mean auditors that are auditing other clients as well. However, there are certain situations where confidentiality may be breached. For example, when the auditor comes across fraudulent transactions or transactions that indicate money laundering or drug trafficking. In these circumstances, the auditors can get in touch with their legal counsel and make this information public, because these are circumstances in which the auditors may breach confidentiality. Another circumstance where the auditor may breach confidentiality is to protect the shareholders' interest. So the company may be defrauding the shareholders, and in this case, the auditors may breach confidentiality, remember, after consultation with their legal counsel. Whenever the auditor needs to sort of breach confidentiality, remember, confidentiality A is not breached if the transactions are not fraudulent or illegal. B, confidentiality cannot be breached until the auditor gets in touch and consults with their legal counsel. So these are important factors that you need to know. So in some situations, the auditors may be obligated by law to disclose information. For example, when they're required by court to disclose information. And sometimes the auditors may make voluntary disclosures of confidential information. These two need to be learnt from your notes that are provided to you. They are very important from exam perspective. The last fundamental principle is professional behavior. This means that the auditors must avoid any action that discredits the profession. Now, this means that when the auditors are acting in professional capacity, they must be professional in their behavior. Their attitude must reflect the integrity of their occupation, and they must not be involved in activities that reflect badly on them or their profession. So these are the 5 fundamental principles of ACCA's Code of Ethics. One of the most commonly tested fundamental principle is confidentiality, because it involves a lot of other situations where confidentiality may be breached. Let's look at some simple examples. The first is XYZ firm has just accepted the audit of Stein Limited. This is a new client for XYZ firm and the audit team has just been decided. Save for the audit manager, none of the audit team members has had experience in auditing this type of company before. Now, this situation may lead to a breach of professional competence. Remember, professional competence means that the auditors should have the required skills to complete the audit and give an objective opinion. And since it has been very clearly mentioned that, say for the audit manager, none of the audit team members has had experience in auditing this type of company before, this may lead to a breach of professional competence. This can very easily be addressed by providing industry training to team members. So, industry-specific training to team members before they start performing the audit. The second example is XYZ firm is the statutory auditor of Frank Company, and during the course of audit, they have flagged a transaction that could indicate money laundering. The auditors are concerned whether to disclose the matter to regulatory bodies or the steps they can take to ensure that the transaction is brought to the attention of the right authorities. Now, money laundering is illegal in a lot of jurisdictions. And if in this jurisdiction there are laws against money laundering, this would constitute a situation where confidentiality may be breached. However, you need to be careful and suggest that the auditors should first seek consultation from a legal counsel, and if this transaction is indeed illegal, then the auditors may breach confidentiality. So these are some of the simple examples of how these fundamental principles may be tested in your exam. The next topic or the next session that we are going to hold is going to be based on the ethical threats associated with the auditor's independence.
If you like this video, visit our website www.skansecampus.com to purchase the complete course at affordable prices. Register today at no cost and access our free 10-day trial.